Start recording. Okay, let's get going here. There we are. Hide the loading controls. There we are. Perfect. All right. So thank you all for coming. Here we are. You came back. Thank you so much for coming back. I'm always afraid I'm going to scare away lots of people on the first night. All right. So here we are. Second night of our 4 planned training sessions this fall. Tonight, we're going to talk about Form 8843 and income for non-resident aliens. Depending on how things go, we may try to get a little bit more stuff in there, but those are the 2 things that we really need to get over tonight. A little bit more detail, we'll do some quick updates, Moodle review. We will also do who is a non-resident alien review. Then we're going to do Form 8843. So we're going to actually first do some actual real tax preparation work tonight. We'll talk about income, then we'll do course and homework assignments, break, switch to resident taxes, hopefully before 7 o'clock. This little thing keeps showing up. There we go. And I made it show up again, of course. All right. So first off, I'd also like to officially welcome a new partner, Hermanas Latinas de Florida. So they are a VITA site down in Florida, and they're going to be partnering with us to do non-resident taxes down there. So I am really excited. Welcome, everyone. So glad that you're going to be joining us, and looking forward to expanding our services to people out on that part of the country. So in terms of the Moodle, it seems like mostly people were able to get into it without too much trouble. There were a few that had problems. It's not an issue. Just email me if you have any issues. For the volunteer data quiz, so everybody that did it before I sent the reminder, they got to provide input on what kind of pizza we have tonight. So hopefully you like the pizzas. If you don't, then please get your assignments done early, and then you can have feedback for next time. Volunteer data quiz, everything was right. There were no wrong answers for any of it. So thank you all for doing that. On the standards of conduct quiz, there was really only one question that there was very much discrepancy on. And everybody agreed that Joe was naughty. He should not have done what he did. He violated the volunteer standards of conduct. But there were quite a few of you that were okay with giving him a warning and having the site coordinator watch him, which, you know, if we think about it from like a normal, regular professional job, that is probably what would happen, right? But from the IRS perspective and the VITA perspective, we are kind of holding ourselves to a really high standard for ethics. And he deliberately violated that standards of conduct, right? He knows that no matter what you receive the income in, if it's cash or a check or Venmo, any of those things, that is income. And he signed his volunteer agreement that he would not knowingly prepare a false return. And that is exactly what he did. And he did it at least once, right? He might have done it more times. We don't know. And having promised to do it right, he still did it wrong. So the question, right, is how could we ever really trust Joe again, right? Because he already promised to do it right. He did it deliberately wrong. Yes, we could watch him, but I would have to watch him like every time, right? Because I would have no way of knowing that maybe this time he sees that I'm over here and he's going to do something else. So that is why Joe would be banned. For the intake interview, generally everybody did pretty well. Question number 2 was the extremely tricky one. So I will remind you of the 5 most important words in science and in taxes, which are pay attention to detail, which is only 4. For the photo ID, so again, this is part of this quiz is to help you get used to trying to find answers in the publications. So I was picking and choosing, like when I saw something in the pub, I'm like, oh, I'll take that out. So the photo ID reference was on page 19, and the quality review team was on page 40. And I do appreciate it. Generally, if you guys didn't answer this one correctly, you answered it more conservatively, right? You wanted the volunteer and the site coordinator and the client or the taxpayer in that review. And I think it's a great idea to do it that way, but theoretically only the site review or the quality reviewer and the tax preparer are required for the review. And in terms of the non-resident alien quiz, nothing really stood out there as needing any additional explanation. So if you do have any questions about any of the questions, just please give me an email, send me a message, we can talk about them further. All right, Link and Learn is still coming soon. Hopefully tomorrow will be an awesome day and we'll find out what this is. I'll let everybody know as soon as that is live and we can start doing things. All right, so a quick review for who is a non-resident alien. All right, so remember, an alien is somebody that is not a citizen of the US, either by birth or naturalization. A resident alien gets taxed the same as a US citizen. A non-resident alien is somebody who doesn't have a green card or has not passed the substantial presence test. And this test counts all of these days, looking at the days in the current year, the prior year, and the year before that, doing some math on them. And basically, if you meet that test, you're a tax resident for the part of the year that you meet the test that you were here for. So the results could be non-resident alien, that's like our wheelhouse. It could be a resident alien, we'd like you too. You could be a dual status alien, in which case you're out of luck because you're a complicated return and you're out of scope, we can't help you. And then this test is used every year to determine your federal tax residency. So every year it could change and it could go back and forth depending on what your situation is. We talked about exempt individuals. So an exempt individual doesn't count the days that they're here in the US towards that substantial presence test. And that is an F1J1 student for the first 5 calendar years. So don't be afraid to use your fingers, 5 calendar years in the US, or a teacher or trainee who was not previously exempt in 2 out of the prior 6 years. So I had that little table. It's a very handy table. I would encourage you to remember it. And a reminder, so family members on the -2 visas, they use that same test. Could be a different result based on when they came, but they use those same tests and same rules. All right. And then this is the little flow chart that walks you through how to evaluate it. We'll talk about that Form 8843 in a minute. So that's kind of where we got to last time in about 2 seconds. Does anybody have any questions before we keep on going? Okay. All right. So if you are an exempt individual, you must file Form 8843. If you have income subject to tax, you send it in with your tax return. If you have no income, that's the only form you need. You sign it and you send it in on your own. The 8843 is the only form that I am aware of that you do not need a social security number or an ITIN, an individual taxpayer identification number for. Everything else, I think you have to have a tax ID number, but not this one. Students will complete parts 1 and 3. Teachers and trainees will complete parts 1 and 2. Spouses and dependent children must also do this form if they are exempt individuals as well, and they will do the same parts as the primary visa holder. It's due on April 15th if you had taxable wages, otherwise June 15th. All right, so everybody here in physical world should have a Form 8843 you can look at. If you don't, they're over there on the table. Everybody that's out online in Zoom land, so it's in the Moodle course, it's in the training materials. I think it's in the forms at the very top. So there's an IRS publications and an IRS forms, and it should be there, Form 8843. If not, irs.gov, search 8843 and you can find it. And this is what it looks like. So we're going to walk through each of the pieces. The very top part is just general information. This is for everybody. First name, initial. So if you have a middle name, you put the first letter of your middle name. If you don't have a middle name, you just leave that part blank, and then your last name. Taxpayer ID, if you've got a social security number or an ITIN, you put that in. If you don't, you can leave it blank. If you're filing the tax return, you don't have to put address information in. But if you're filing only this form, then you need to put in the address in your home country and then your address here in the United States in these 2 forms. Then the next section is the part 1, which is the general information. And here the instructions have changed. So we're going to go through them for all of our returning volunteers. So on line 1A, you're going to put your non-immigrant visa type for your most recent entry. And then the date of your most recent entry on that visa. The really easy way to remember this is that when somebody comes into the US, their passport gets scanned. There is an I-94 page out on the US government website. You can enter your visa or your passport information. It'll tell you your most recent entry, visa type, and date. That's what you put in here. So it makes it really easy to figure out what that is. And then the next question, did you change your visa without re-entering? So you were here in the US, you did a bunch of paperwork and you changed from, say, like an F2 to an F1 or something like that. It is not common. Almost always you have to leave the country and then come back in. But there are a few circumstances where people do that. So if they change their visa without reentering, you would put that information, the date the visa changed and the old visa type. Otherwise, it's the same information you have on line 1A. Countries that you're a citizen of go on line 2. Countries that issued your passport go on line 3. Passport number is on line 3B. So if you have more than one, make sure you identify like which country, which passport that belongs to. 4A, so here's where we're going to do some math. Enter the number of days that you are physically present in the US during each of those years. So we do the current 3 years, so 23, 22, and 21. And then the number of days that you are exempt in the current year. So, which is generally going to be the number of days that you're present, right? Because if you're here on an F visa, you're going to be exempt for all of those days. You're going to have that same number matched. Generally, the only time we see somebody be different is, for example, they came in on a B visa to do a university tour for a few days, and then they left, and then they came back in the fall to start their full-time presence. And so they might have been here for 4 days on a B visa. That wouldn't count for being exempt. The next section is for teachers and trainees. On line 5, teachers will put the name, address, and phone number of where they taught. Everybody else leaves it blank. And then for line 6, if you're not a teacher, you're a trainee. So then you would put the name, address, and telephone number of the director of the academic program or specialized program that you participated. Generally, we say if you want to put your International Student Services group on this, that is a good organization to put or name to put, because somebody in ISSS or OISS, or whichever group you have, they will be able to say, yes, see how was a student here at the University of Minnesota during 2023. We can verify that he was in valid F1 visa status at that point. If you had a J or Q visa, for line number 7, if you had a J or Q visa in one of these years, you would put it down. If you had an F visa or an H-1B or some other type of visa, you do not put that down, which is kind of strange to me, but that is what they want you to do. It's only the J and the Q. And then line number 8, check yes or no. So this is that, were you exempt for 2 out of the 6 prior years? So pretty much always it should be a no, right? Because if you're exempt, then why are you saying that you're exempt this year? Because your exemption rule is 2 out of the prior 6. And then for part 3, so this is where students put their information in. So you enter the name of their academic institution. And then on line 10, you do the same name of the director of the program that you participated in, name, address, phone number for the year 2023. So again, usually International Student Services is a good number to put there. Put whatever your contact is, put the general number 651-626-7100 or something like that. We have that in our guides for them to know who it is. Line 11, you're going to enter your visa type. So here you have more options, F, J, M, or Q that you held during any of these years. Line 12, were you exempt as a teacher, trainee, or student for any part of more than 5 calendar years? So again, that you should only be exempt for 5 years. So the answer probably should be no. Did you apply for any permanent or affirmative action steps for lawful permanent residency status? So, right, did you win the green card lottery? That is a no to this question. Or actually, no, if you applied for the green card lottery, it's a no. If you win the green card lottery, it is a yes. So if you do get a green card or are authorized to get a green card, then you would say yes to this. And you would have to explain what happened. Otherwise, you'll say no, and that's that. All right. The second page is really straightforward. Basically, we're not supporting any professional athletes. We're not generally supporting any individuals with a medical condition that prevents them from leaving the United States. And so those parts are always blank. Sign it down on the bottom only if you are sending it in on its own. If you're sending it in as part of your tax return, you don't have to sign this form on its own. You'll sign the 1040 NR form, which is the main form that applies to everything. All right. Any questions about that?
I have a question.
Yes, go ahead.
Can we go back to the instructions for line 1B?
Yes, ma'am. Thank you, Kathy.
Okay, so if you answer yes, in the instructions down there, I think it should say you need to enter your new visa type.
All right. Well, so your new visa type, yes, you're right. Thank you. All right. Kathy, you keep me honest. All right. Yes, enter new visa type.
Yeah,
There we
I think they technically, but I don't, yeah, I don't know if the software lets you do it. They want the new visa type first, but we'll have to see how that works with the software.
Yeah, we can do that. So we'll say new visa. Oh, I'm on caps lock. Type. Date visa changed. Changed. Oh, visa type. There we go. That's a little bit more clear. All right. And I'm going to double check it because I thought I copied it from the instructions. So I'll make sure that that's not what they say, because that would be terrible. Okay. All right. Anything else? Okay. All right. So, oh, yep. Sorry. Go ahead. So you can put you can use, well, the way to think about it is to say, if the IRS wanted to call to confirm or send a letter to confirm that you were a student, where could they send it? So International Student Services will always know that you were a student here, or the person was a student here. You can also put like your professor or your department. Generally, I don't love putting a professor just because they move on, right? They get a different job, they go somewhere else. So they may no longer be there. That phone number may not be valid. But like that general International Student Services number, that number is going to stay good, you know, for ongoing, hopefully. Yes.
So only if you have an FJ and be included, not any other visas.
Yes, correct. Yep. So no B1, B2, H1B, O, anything like that. Any other questions? Yes.
So I think question the application for so like how does it affect students? It's like because it's not accepted, but you just ask like whether you apply or not, right?
Yeah, but it's basically just asking if you've applied or not, right?
How does it affect? Like,
It doesn't affect anything other than you've answered it correctly. That's really all it is. It doesn't change. So the answer is number 13. Does the answer change anything? And the answer is no, it doesn't change anything. You just answer it based on whatever reality is. All right, any other questions? Okay. All right. So we are going to do some practice filling out form 8843. This is like 25% of the IRS test, so it's very important. So you all need to know about. Okay, so I'm going to do one example, and then you guys are going to do two practice forms. That's why I told you to grab two. Everybody that's out in Zoom land, so there is the PDF that has the practice examples out on the Moodle as well. For all of our scenarios that we do this, we're going to pretend that we are now in 2024. To be why I always don't like to save the presentation before I do that. So it is now 2024, 2023 is done. So you can assume when we're filling it out as well that you don't need to do the address. All right, oops, let me do one more here. Okay, so as a part of this, so one of the things that we do for all of our trainings is we have a series of scenarios that we use kind of over and over again in our training. And these walk you through what I would say are very common situations for the international students that we're going to help in our tax clinics. So as we go through them, you'll see the kinds of situations that you're going to see in a tax clinic. So when you see them for real, you'll be very familiar with kind of what that situation is like. And so our first scenario is a very common one. It's scenario one, which is Lisa. So Lisa is an F1 student from China. She came here on August 8th, 2021. That was a lucky day. She went home over the summer of 2022. She's studying accounting here at the U of M. This is the address. That is her contact information. Her passport number is very imaginatively created, 1, 2, 3, 4, 5, 6, 7, 8, 9. Her social security number is all ones. All right. So with that, we are going to do that, do this. We're going to go find form 8843. There we go. Okay. And
Of the same.
we're going to do, all right. I'm going to make this one smaller. Make this one bigger. Okay. So, Lisa, no middle name. 111111111. We're going to assume that she is filing this with a tax return, so we don't need to do address information. All right. She has an F1 visa. All right, and her most recent entry date was 8/31/2022. That's when she came back from visiting her home. Her current immigration status is F1. It hasn't changed, so she's going to just do F1. The country that she is a citizen of, give me 2 seconds here. There we go, is China. China issued her passport number. It's very crazy there. All right. So now we get to do some math. All right, so for 2021, she was here all of December, which is 31 days, November, which is 30, October, which is 31, September, which is 30. So that is 2, right? 122 plus 31 minus 7 for August, right? 24. 146. Does everybody follow my math? Do you guys agree with that? All right. This is like some of the worst math you're going to have to do. Oh, Mario, why didn't I choose better dates? Okay, so for her 2022 dates, so she was here 31 days in January, 28 in February, 31 in March, April, 31 in May, not 31 in May, 24 days in May. Right, 10, that's 4, 4, 6, 12, 14. So that's 144 days. And then this was 30 plus 1. So that's 123. 7, 6, 267 days. All right. And then 2023, finally, we get an easy one. She was here the whole time. Right? So we don't have to do anything for math there. 365, she was here the entire year. She is still exempt, right? If we count her days that she was here, or the years, 2021, 2022, 2023. So she's in year 3 out of her 5 for being exempt. So she is exempt this year. She's exempt the entire time. Now she is a student. So she skips part number 2. She's not going to do anything there. She's going to go down to part number 3. She's going to say University of Minnesota. Then because I'm a little bit lazy, I'm going to copy that over here. That's the address, name, address, and telephone number. 651, no, yes, 626-7100. We're going to copy that same information here with Tracy Senti's name. All right. What visa did she have in these years? So she was not here 17, 18, 19, 20, F1, and F. So it doesn't have a spot to let you do anything more than F1 or F. So it doesn't really matter that she's an F1 or an F2. She would be an F1, but that's okay. All right, were you exempt as a teacher or trainee for any part of more than 5 calendar years? The answer is no. Did you apply for any affirmative action for permanent resident status? The answer is no. And there we go. That is her form. So she doesn't have anything to enter on the professional athlete. She doesn't have anything to enter on the individual's, the medical condition. She's not going to sign because she's going to do it, the signature as a part of her tax return. All right. So that's all there is to it. So it's a pretty simple form. It's basically some information about her, information about the school she's attending, and her history here in the US with her visa. All right. Are there any questions that anybody has on this? Yes.
Go for box 4B again.
Box 4B. All right. So first off, we want to confirm, right? So Lisa is an exempt individual, right? An exempt individual is an F visa holder in the first 5 calendar years that they've been in the US. So she came in 2021, so 21, 22, and 23. That means that all of her visits in the US on an F visa in 2023 will be exempt. They will not count for the substantial presence test. And she was here all of 2023, right? She came in the fall of 2021. She went home the summer of 2022, but she didn't go home this past summer. She was here in the US. And so she was here the entire time. So her number of days that she was present were 365. She was exempt for all of those days. Does that make sense?
So very simple, it's the number of days for here.
Yep. Yep. As long as all of the days that they were here was on that F visa or that J visa. Yes. Yep. So if, for example, I didn't have anything in here, right? But if I said, oh, she came for a college visit trip back in June of 2021, right? And she was here for 4 days, then I would say I would need to put those days as not being exempt, right? Because she would have been on like a B1 visa or B2 visa, a tourist visa. Okay. Yes.
Well, I didn't understand like 17A, why do they want to go if it prevented you from even moving?
So the reason why, so the idea is that if you are here long enough, you have to pay tax like a US citizen. And so if you, for example, you came on a tourist visa, you did this fabulous trip, whitewater rafting down the Grand Canyon. It was amazing until the very end when your little raft tipped over and you broke your collarbone and collapsed your lungs because you were under the water for 3 minutes and you were in the hospital unresponsive for 3 months. So under a normal circumstances, you would have been gone long before this time. But because you were here that extra time and you couldn't leave, right? You were in the hospital, you couldn't leave. They would say, okay, that's a good reason. You couldn't go. We won't count those days for being a resident. Hopefully that doesn't happen to anybody. All right. Any other questions? All right. For whatever it's worth, so when COVID was going on, that was used a lot because people couldn't leave because of COVID, right? Either because of restrictions of people coming in, plane issues, all that kind of stuff, but it saw a lot of use then, but it's not common now. Okay. All right, we're gonna do that. We're gonna say no. All right. Okay, so that is Lisa. So now you guys are gonna get to do that, all right? So we are going to go through 2 examples. We're going to do Harold, and then we're going to do, I think it's Sergio is the next. Nope, Robbie. Okay. So for everybody here in the University of Minnesota, your Twin Cities here, fill out those forms by hand. You can get the information about them over there as well as the blank forms. For everybody that's online, I will create a breakout room. If you want to show those to me, you can. If you feel pretty good about them, you can also just email them to me and I will give you feedback on them that way, which might be a little bit easier to do rather than having everybody here. All right. So I am going to pause our about her. Okay, so let's talk about these two people really quick. So Harold is an F1 student from Norway. He came here on January 10th, 2022. He has not left, so I took it easy on you guys for your math. He's getting a scholarship to study electrical engineering at Lehigh University. This is his contact information out there. It's Olga. That's his passport and social security number. And then Robbie is a teacher from the Netherlands. He came here on June 10th. He's been here ever since. So this is June 10th, 2023. He was here previously as an F1 student from 2013 to 2017. Right now, he's here at the University of Minnesota. He's teaching physics. That is his passport and social security information. All right. I need to hide that so that. All right. If you have any questions, please raise your hand. Otherwise, we'll just give it some time for everybody to work on these. Okay, so we are going to get started here. So a couple of comments, just general comments from seeing everybody work on them. First one, dates are always going to be month, day, year. So when I say Robbie arrived 6/10/2023, that means June 10th. It does not mean October 6th. So there were quite a few folks that got that one. It's not a problem, right? That is definitely not the way everybody does their dates. And so that's why this is one of the reasons why we practice all of this stuff. The second one, so for, what was it? For Robbie again, so he's a J1 teacher. So you would only fill out the line that says teacher. And we don't put the fact that he had an F1 in 2017 on that line where it has the little check boxes, even though it matters and we use that, we're not going to put that because it's only J and Q pieces that we put there. Okay. All right. So you will have an assignment to do a little bit more of this. This is definitely very important. This is also one of the places that our international students sometimes struggle because there's no real logic to this, right? It's just, okay, put this here, put this there. It's not obvious. Oh, well, of course you fill out the number of exempt days and of course it matches or doesn't match. So that's definitely an area where they can generally use a little bit of help. All right, and with that, we are going to go into the fun of it with federal taxation for non-resident aliens. All right, so this is really the heart of it. So we've talked a lot so far about like who is a resident alien, who is a non-resident alien, but let's talk about what that means. So a resident alien means that they are a US resident for tax purposes. So we're going to treat them just like, for the most part, just like any other US citizen or permanent resident. They're going to pay tax on everything. A non-resident alien means that they are not a US tax resident. But where are they a tax resident of, right? If it's not the United States, what country is the right country? And this is very important because it determines their treaty benefits. So when we look to determine this, our first question, right, is where were you living before you came to the United States, right? Where was your permanent home? So not like a temporary visit for a vacation. Generally, if you are living somewhere for 6 months or more, you will become a tax resident of that other country. But if it's a temporary visit, let's say that you are from China, but you started school in Italy for a year, and then you moved to the United States, we would probably say that that Italy visit was a temporary visit because it was just for education, and your permanent home was still China. If you were previously employed, so you could say, where was your business or place of employment? Where is your family? What is your citizenship or passport? Can you stay there indefinitely? Can you work there if you want to? If you are still not sure, and if that person is not sure that you're talking with and you really want to know, the OECD, Organization of Economic Cooperation and Development, has a fabulous page that has links to a couple hundred countries and all of their different tax residency rules. So you can go out there and look at those. They generally link to a country-specific page, which then may link into a tax treaty where they talk about what residency is. So you can find a better answer if you're having troubles with that. Generally, it's pretty easy. Generally, you know, if you're a college student, a first-year college student, where did you come from? Where you're living? You were probably living at home with your family, wherever that is. That's going to be what your country of tax residency is. All right, so let's go through a couple of examples. So Lisa, I just talked about this, right? She attended a boarding school in France prior to coming to the United States. Her family lives in China. She has Chinese citizenship and passport. She always went home to China over the summer. She was only gone temporarily. She's going to be a resident of China. Harold, our dear friend Harold, he went to work at a ski resort in New Zealand because who wouldn't want to do that for 5 months before he came here to study? His family still lives in Norway. He has Norway citizenship and passport. This is also going to be a temporary absence, right? He was not living permanently there in New Zealand. Even though he was working, that was not his like new future home. So he is still going to be a resident of New Zealand. Our final one example is Alma. She was originally from Syria, but she and her family left and received asylum in Germany. She lived there for 2 years before coming to the United States as a student. She is a Syrian and she has a Syrian passport, but she and her family don't know if or when they'll return to Syria. So in this case, we would say that her country of tax residency is Germany, right? They've left. They are not living there now. They don't have any plans to return. They would like to at some point, but there's no concrete, no definite end to their stay in Germany. So Germany is what she would use. All right. And let's talk about the general tax question. So this is like a very 50,000 foot kind of view. How do we calculate taxes? We start with income. We subtract adjustments and deductions to get taxable income. We take that times the tax rate to find our total tax that we owe. We'll subtract any credits. We'll subtract any withholding or payments that were made to find out, is it a good day and we get a refund, or is it a bad day and we owe lots of money? And the reason why we spend so much time on residency is because treaties can change basically everything on this tax equation. So, which is the part that I love about non-resident taxation, and hopefully you all will come to love it too. All right, so let's define our terms a little bit more just to kind of make sure everybody's operating kind of on the same ground. So income, really generically, right? Money coming in, money coming to you. Adjustments, they reduce your income based on money that you've spent and saved. So if you spent it on the right thing, you can subtract that from your income and you don't have to pay as much tax. There is a thing called an exemption that would reduce your income based on people. The current tax law says the value of those are zeros. Theoretically, they're going to go back into effect in 2025. We'll see if they change the laws again or not. But the idea there, rather than what you spend your money on, it's like how many people are on your tax return, how many people are in your family. Deductions also reduce your income. The standard deduction reduces it by a set amount. Only students from India can use this, and only students from India. Or itemized deductions, which can again reduce your income based on money that you spent on certain items. The tax rate is the percentage of your income that's paid in tax. And the US has a progressive tax system. So that means we start off at 10%, we go to 12%, and then 22, and then 24. So as you earn more money, you pay more tax. Credits will reduce the amount of tax that you owe. Some only reduce it down to zero. Those are called non-refundable. Other ones will actually give you money back. Those are called refundable. Those are everybody's favorite kinds of credits. Withholding is money that's taken out of your income that is sent to the IRS. And this is money that was not taken out by you, right? This is whoever gave you the money. They said, nah, we're not giving you everything. We're going to send some to the government because you're going to owe taxes. Estimated payments are when you send money to the government. You say, okay, I know I'm going to owe a lot of money. I'm going to pay, $100 now, so I don't have to pay $500 when I pay my taxes. So estimated payments are payments that you make. Withholding is payments that whoever was giving you the money, they're the ones that make those payments, right? Okay, so treaty provisions. So treaty provisions generally will override the US tax law to either exempt income, basically take the tax rate down to zero, or to give it a lower tax rate. Publication 901 has summaries of those provisions, and there are more details provided. So we're going to spend a decent amount of time talking about treaty provisions. And before we get into that, though, I'm going to talk about scope a little bit, because this is a very important topic for us. As an IRS FIDA clinic, I would love to help everybody, but we cannot do that. So our goal, right, is to help as many as we can, focusing on those who need our help the most. And to do that, we have limits on what we can help with. The IRS puts limits on some things based on individual circumstances, like dual status aliens. They also will do it based on types of income. So cryptocurrency people, we cannot help you with that. When we talk about those items, I'll identify those in red. So those are a rule the IRS put in place. We can't change it. Everybody's got to follow it. To help with some of our topics, you're going to need dual certification, which is going to be foreign student plus advanced. So everybody that's sticking around here after 7 o'clock, I'm not going to be done early, sorry. If you're sticking around after 7, you're going to be able to help on those topics, and you'll see those highlighted in green. We also put limits on our clinic as well, because even though, you know, we would like to, we still can't help everyone. And so we have to limit it to what we can. Because we are an FSA site, everybody has to have an email. So our primary limit is that you have to have a school, nonprofit, or government email. There are a few other things we limit on, and we'll identify all of those things in blue. There is nothing in the software to stop somebody from doing something that would fall into the blue or green or red category, right? We have to know what those limits are, and we have to say, I'm sorry, you know, you can keep on going with that. Go to the IRS website for help, but we can't tell you what to do or how to put that into your return. And we can't say that it's right when they've done it. They say, look, I entered my crypto. Does that look right to you? I'm sorry, I don't know. Did you make any money? Pay somebody to do your taxes, or keep doing that research on the IRS website. And speaking of paying somebody, we cannot recommend a paid preparer, right? Remember, that's one of our standards of conduct things, right? We can't make any money off of the clients. We can't help anybody else make any money off of the clients. Okay, so let's talk in more detail about each of these topics. So income. So the first thing that we need to know for non-resident taxes for income, where does that money come from? The reason why is because for non-residents, foreign source income is generally not taxable. So if it's gifts from parents, wages from a job in their home country, scholarships from their home government or an organization in their government, or foreign source income connected with a trade or business, which would be out of scope. But anyway, if that money is coming from outside the United States, we pretend that it does not happen. It does not exist. Only what matters is the United States is what happens in the United States. So, and learn from Joe, right? If you earn any money, it doesn't matter what form it comes in. It is all going to be taxable. It all needs to get reported on your income tax return. The next idea is effectively connected versus not effectively connected. And the idea is that, why is this non-resident alien here in the United States? What is their purpose? For our people that we're going to help, right, they're F visa holders, they're J visa holders, they're teachers, they're students, they're researchers. So things that are directly connected to that purpose are going to be effectively connected. So that can be things like a scholarship to come here at the University of Minnesota or another school. That could be wages working on campus, wages working on an internship. Dividend income or stock sales income because they took a finance class and so they were doing a portfolio, right? That is not going to be connected because they did not have to trade in stocks to take that class. It might have been related a little bit, right? But it was not a requirement for them to get a grade and get credit to be able to do that trade. So that is not effectively connected income. Other types of income would be royalties if they did any kind of like wrote a book or anything like that. Other bank or pension interest, gambling winnings, if anybody is a gambler, all of those things are not connected to their purpose here in the US. They're not effectively connected income. And not effectively connected income is generally taxed at 30%. So it is taxed at a not very good rate. The one exception, though, is bank interest. So for non-resident aliens, bank interest is not taxable. It's not taxable, not even reportable. That includes things like a savings account or a checking account or CDs. It would not include like a bond interest, like if they went and bought a municipal bond or something like that. But generally, any kind of a bank interest is going to be not taxable at all. And there's not even a spot to put it on the tax return form. All right, wage income. So the source of wage income is based on where the services are performed. So if they are working here in the United States, then that income is going to be taxable here in the United States. Doesn't matter where the company is that's doing the paying. Generally, wages earned by non-resident aliens who worked remotely for their employers in their home countries. So if they went home for the summer and they were working remotely for the summer, that would not be taxable income in the US because they were overseas. They were outside of the country, right? Remember, what's outside of the United States stays outside of the United States. That is out of scope for us. We wouldn't see it, and it's not taxable anyway. The employer sends a form called a W-2 that shows the client or taxpayer how much wages they earned. Box 1 is the amount that gets reported on the tax return. Generally, most employers are pretty good. There was a whole mess when COVID first hit and people were working everywhere. But now that things are standardized, it's usually pretty good. There are some special exclusions for foreign employers, but those are very rare. We have generally not seen those in our tax clinics. All right, so wages are dependent income, right? You're working for somebody else. Self-employment income, the idea there is that you are working for yourself, right? You have your own business. You're an independent contractor. So this could be doing Uber or Lyft or Etsy, something like that. Some internships are also treated this way, where you get paid on a 1099 rather than on a W-2. From an IRS perspective, you're considered to be operating your own business. And so if as a business, if you have qualified expenses, you can deduct those against your income, right? If you're working as an employee, there are generally not really any deductions that you can make against your income. But if you have your own business, then they assume there must be costs for you to run whatever business that is, and then you can deduct those. Generally, that's going to be taxable if it's earned in the US. They'll get that 1099 NEC form. The form is required if you get more than $600. If you get less than $600, it's not required to give you the form. They generally won't do it. But still, right? Remember, Joe, you still have to report that income. And then unfortunately, this is also out of scope for us because of the IRS rules. So this is not something that we can help people with. It's not very common, but we do occasionally see students with a 1099 coming in from an internship. All right, so wages and self-employment income can be excluded by treaty. All right, on publication 901 or 4011, if you look at those, so if everybody's borrowed one of those books here, if you go to, I think it's page 15, 16, something like that, 15, that shows you countries with treaty benefits for studying and training. Pardon me. So that would be people that are here as a student, they're working, they can exclude that much income from their taxes. If they know about it and they talk to their employer, they can fill out a form 8233 that says, hey, I am a student from Bangladesh. I love being from Bangladesh because I don't have to pay taxes on $8,000 of my income. And then the university or whoever they work for will say, okay, your first $8,000, we won't take any tax out of. Everything above that will take your tax out. Those clients would get a 1042-S form that shows that first $8,000 having no tax, and then the rest of their wages on their W-2. Even if they don't fill out that 8233 form and they just get all of their wages on a W-2, they can still claim the tax treaty, right? Their ability to claim the tax treaty is based on the fact that they're a non-resident alien and that they're a resident of whatever country it is. It's not based on the fact that they signed the paperwork to tell their employer about their treaty benefits. All right. So let's walk through an example of what a tax treaty looks like, just to kind of give you a feel for it and how it looks in the various publications. So we're going to do US and Norway just for fun. All right, so this is the actual language of the tax treaty, Article 16, that talks about students and trainees. And it is very difficult to understand, right? It's horrible to parse because it says an individual who is a resident of one contracting state at the time, he becomes temporarily present in the other contracting state, blah, 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 lots of other contracting states, and so on and so forth. So the first thing that you should do, if you ever have to try to figure out what's going on with a tax treaty, write out contracting state is which state, other contracting state is the other state. So in this case, someone who is a resident of Norway becomes temporarily present in the US, only present in the US for the purposes of studying, would be exempt from tax for income from personal services performed in the US in an amount not to exceed $2,000 or its equivalent for any year, right? So that's what it would look like. All right. So I'm going to go back up here on the second paragraph here. So shall be exempt from tax by the US with respect to amounts described in the paragraph for a period not exceeding 5 taxable years from the date of his arrival in the US. If we move on to publication 901, it also has this information, but it starts to simplify things. And it will say all of the same things about resident of Norway, income from personal services, $2,000. But here they say an individual is entitled to the benefit of this exemption for a maximum of 5 calendar years, right? So they drop that from the day that you arrive thing. From day that you arrive still applies, but it's not listed here. And if we go to the publication 901 tables, it gets even more simplified. We have Norway, compensation during training, so studying and training for 5 years. It doesn't matter who gives them the money, $2,000 PA is per annum. And it's in Treaty Article 16.1. And then in our handy dandy little 4011, which I love, but is very short and brief, it just says Norway 5, 2000, 16.1. All right. So that's the train of how it goes. So even though it says Norway and it says 5 years, it's not any 5 years. And this is generally true for all of the tax treaties, right? It's for 5 years or whatever period of time from the time that they arrive. So if they don't work for those first couple of years, they can't say, oh, well, I'm going to use my treaty later. No, I'm sorry. It's going to probably be from the day that you arrive. And if we ever have a question, we can take it all the way back to the treaty and find that out. All right. This is what a W-2 form looks like. So wages and tips go right here in box number 1, tax withheld up here, state information down on the bottom. We'll talk about the rest of the stuff later. This is what a 1042S, right? So a 1042S is foreign persons US source income subject to withholding, basically subject to special withholding rules. In this case, for our person, it's a treaty, right? We said, I'm from Bangladesh, I get $8,000 I don't have to pay tax on. They would say income code 20, right? Because that's income from studying and training. The gross income was $8,000 because that's how much you could get. And then there would be all kinds of other information about the school and about that person. All right. So when we talk about those two forms, again, just to kind of compare and contrast them, right? W-2 is employee reports income from working as an employee. 1042S is income that may be subject to a treaty or gets special withholding. So it can be other types of income. It can be scholarships, it can be interest, it can be dividends, it can be capital gains, it can be all kinds of stuff. The withholding forms are different. W-4 for a W-2, 8233 for the 1042S. On the W-2, the employer uses tables from the IRS to estimate the amount of tax that people will owe. So it's never an exact calculation. It's always going to be an estimate. On the 1042S, the employers will use a special rate based on the treaty benefit or lack of a treaty benefit. So it'll be like 0% or 30%. On a W-2, state is usually withheld, and you can have FICA taxes withheld, which are Social Security and Medicare. We'll talk about those later. On a 1042S, state income tax is, I say, almost never withheld. I've never seen it be withheld, but theoretically it could be. FICA taxes are also, they're never withheld because there's not even a spot to put that on there.
So if you have a scholarship that's more than $8,000.
Yes. Yeah, so if it was a scholarship, we would go to the scholarship page because those are different.
Okay.
And then we would look at the amounts and we would look at the country to see if it was there, is what we would do.
Yeah, and he's working like an on-campus job.
Yep.
And for employer with withheld some money for taxes, so you should be eligible to get that back if it's below $8,000.
So the question is if you're working on campus and you had, like, so say they were from Bangladesh and they earned income less than $8,000, if they hadn't signed their treaty benefits, and so that was all income was reported on a W-2, then yeah, they totally get that money back. So you can sign a form, a paperwork form with the university kind of upfront, basically saying, hey, this is where I'm from, I get this treaty benefit, and they will apply that like as you earn money. Or you can sign a tax return afterwards saying, hi, I'm from this country, I get this treaty benefit, you know, don't count this $8,000 or whatever amount it is on my tax return. So, all right, but either way, at some point, well, you're gonna have to sign on your tax return no matter what. So, but it's not a requirement to go sign the paperwork with the university to do that, to say that you have a treaty. It's not required to do that at all. All right. And yeah, and like I say here, so the income form doesn't determine your tax residency. It doesn't determine your treaty benefit. So just because it says, they try to do it right, but it's possible for a resident to get a 1042-S form. It's possible for a non-resident alien to have income reported on another form. Moving on. Okay. All right, so on the 1042-S, so you already saw it a little bit in the books here. So there are, basically they have a code that talks about what kind of income this is, right? So if you get a W-2, we know that that's wage income, but a 1042-S can be used for all kinds of different stuff. So there's lists of like 40 some different codes of all the different types of income. The ones that we're gonna generally see are code 16, which means it is a scholarship or fellowship grant. A code 19, which means it's compensation for being a teacher or researcher, or code 20, which is compensation during study and training. The codes are based on your visa type. So if you are here as an F1 student, say you're getting your PhD, and part of your job is to do research, you are still going to use code 20 because you are here as a student. You're not going to be using code 19 for teaching and research because that is not your purpose. Your purpose is here as being a student to study. Okay? All right. All right, my favorite slide in the whole world. All kinds of very fabulous special treaties. Okay, so there is a set of countries, the Fabulous Six, that have this really cool treaty benefit. You are exempt as a teacher or researcher from all income that you earn being a teacher or researcher for 2 years. No matter how much it is, doesn't matter, unlimited income. However, if you stay into that 3rd year, even just one day into that 3rd year, basically that treaty benefit vanishes. It retroactively disappears like it never even existed. And now all of a sudden you owe tax on everything for your entire visit. And those fabulous 6 countries are India, Luxembourg, the Netherlands, Thailand, Pakistan, and the UK. And this is duration based, so it's 302 sets of 365 days or 366 if it's a leap year. So it can include a time when you're a resident, which is unusual, but they are serious about it. If you stay one day into that 3rd year, you owe tax on everything. Canada also has a really cool treaty. Basically, for Canada, if you earn income up to $10,000, you don't owe any tax on anything. If you earn more than $10,000, you owe tax on everything. So it's a real cutoff there. It's like nothing or everything. And it's not just the money over 10,000, it's everything. Germany has a fabulous treaty benefit that is eliminated retroactively for wages if you are here for more than 4 years, which is actually relatively common for students, right? They're usually going to be here for more than 4 years to finish their degree. And then China finally has a fabulous treaty as well. The student exemption of $5,000 continues even after they become a resident alien, as long as they are still a student. So that one keeps on going. And then teachers and researchers, they get to be tax exempt for 3 years, even though they become a resident alien that 3rd year. So they've got a good deal there as well. Okay. All right, so we're going to do a couple of examples here. There we go. Make this show up. Where's my, all right, everybody out in Zoom land, get ready. We are going to do a poll. All right, so we've got 3 examples here. So Roberto is a J1 student from Italy. He came here in 2021. In 2023, he earned $9,500 as a teaching assistant. How are his wages going to be treated? Is he going to have it be all taxable? 5,000 is treaty exempt and the rest is taxable, or is it all treaty exempt? Then Rhonda, F1 student as well, but she's from Poland. She earned $9,500 in wages. How is she going to be taxed on her tax return? And then Reggie is an F1 student from Canada. He earned also $9,500 in wages. What is he going to owe on his taxes? Is it all going to be treaty exempt? Is it going to pay tax on everything, or is he going to pay tax on a part of it? So if you are out in the Zoom world, please go ahead and respond. Look at your 4011s. We're going to give everybody in Zoom world a few minutes, and then we'll pull everybody here in the all right, so if you've got this here, so I would say we're looking at Roberto, who is a J1 student. So we would want to go look at the treaty benefits for students for wages. Right. So for everybody here in the room, so Roberto, do you think, raise your hand when you think the answer is right. Do you think all of his 9,500, is it going to be taxable income? Raise your hand. What about like half of it is treaty exempt, half of it is taxable? What about all treaty exempt? Anybody think he's all treaty exempt? Right. What about Rhonda? She is from Poland. What do you guys think about her? Is he going to have all of it be treaty exempt? What about all of it be taxable? What about 2,000 taxable, 7,500, or 2,000 not treaty exempt, and then 7,500 taxable? All right. How about Reggie? Our friend Reggie from Canada. 9,500 in wages. Do you think it's going to be all taxable? Raise your hand. What about partly taxable, 5,000 treaty exempt, 5,000 not? What about all treaty exempt? Raise your hand. Yes. Okay. Fabulous. Let's do that. All right. Show correct answers. There we go. That's right. Yeah, so Roberto is out of luck, right? There is no treaty for Italy for students. So he is going to pay tax on everything. So he is not super happy to see us today. Rhonda does get a tax treaty, right? It's only $2,000, but still, that's pretty good. So she only has to pay tax on $7,500 of her wages. And then Reggie is super excited, right? Because Reggie doesn't have to pay tax on anything. He picked the right time to stop working. He's under that $10,000 limit. He doesn't have to pay tax on anything, right? And so this goes, part of this example, right, is to show what looks like the same exact situation, right? Here are these 3 students. They earn the same exact amount, and they have very different outcomes, right? Somebody doesn't pay any tax. Somebody pays a bit of tax. Somebody pays a lot of tax, right? And so when we're dealing with this, you know, if you hear, right, we hear a lot of students, oh, well, my roommate did this and they didn't have to pay any tax. Well, I'm sorry, you know, unless your roommate is right here and we can talk with them about their particulars, we can just say that it's very easy for every individual to have a very different result on their taxes. And we're also going to try to, when we talk about this with everybody, right, we're going to try to be respectful and keep the information confidential, right? Because if we yell out, hey, look at this tax treaty that Reggie's got, right? He doesn't owe anything. Roberto is going to feel not very happy. He's going to be like, dang, like, why does he get that, right? This is really crappy here. So we're going to try to make sure we keep all of that information confidential so that we're not sharing them.
Question.
Yes.
The software knows we enter the country and knows the
No.
exemption. We
No.
have to figure out this. Okay.
So you will have lots of help, but yes, we need
Okay.
to figure it out. So that's where
Okay.
so the first help is that 4011, right? That's the
Mhm.
first bit of help. And then there will be more help when we get to it. All right. Okay, so let's do this. We're going to just do these really quickly. So Frederick here is on a J1 visa. He is teaching and doing research. He is going to stay here for 3 years. So he is a teacher or researcher. So he came in 2022. So 2023 is his second year. How is his income going to be treated? If we think it is taxable, do a thumbs up. If we think it's treaty exempt in Zoomland, you can do an applause. If it's taxable, raise your hand here. What do you think? Taxable, treaty exempt, raise your hand. Yes, that's right, treaty exempt. So if we look at the 4011 for income code 19, benefits for teaching and research. We look at Germany, we see 2 years, no limits. Frederick is a happy guy, right? He's not paying any tax. All right. Our next person is Mary. So Mary is also here on a J1 visa to teach. She came from the UK. She got here in 2022 as well. She also plans to stay 3 years and is getting paid $45,000 per year. How is her income going to be treated on her tax return? So again, thumbs up on Zoomland if you think it should be taxable. Give me applause if you think it should be treaty exempt or some other thing. Everybody here, what do you think? Taxable, raise your hand. Treaty exempt, raise your hand. Yes. All right. So you guys have wandered into a quandary, right? So technically, right, as a visitor from the United Kingdom, her treaty does apply for 2 years, right? And it is unlimited. But she is from one of the fabulous 6 countries, which says if she actually stays here for all 3 of those years, she is going to owe taxes on everything. Not only that, but if she stays and she hasn't paid tax, she's going to have owed it from 2 years ago or a year ago. They're going to charge her interest and penalties because she didn't pay on time. All right. So if I saw Mary in our tax clinic and this was her situation, I would have a conversation with her. I would say, Mary, what are you going to do? Are you going to stay? Are you going to go? What is your plan? Because if you're going to stay, if you're really pretty sure that you're going to stay, don't claim your treaty. Pay the taxes because you're going to have to do it anyway. So pay them now, get it over with. If you leave early, you can file an amended return, claim the treaty, get your money back. But if you claim the treaty now and you stay, you also have to file a return, amended return. And then you have to say, oh, I should have paid it back then. I'm so sorry. Here's some extra money. I won't do it again, I promise. So, and we definitely do see people in this situation. And so I would say if they are quite sure that they're going to leave, claim that treaty for all you want to. If you're not really very sure or you know you're going to stay, then don't claim the treaty. Excuse me. All right. All right, let's talk about Ed really quick. J1 non-resident from Canada. He's doing postdoc work. He only got 12,000 because he was only here half the year. Is his income going to be taxable? Do thumbs up or raise your hands. Taxable, Ed, J1. Non-taxable, treaty exempt, raise your hand. All right. It is going to be taxable because it's over 10,000. So he's fallen into that trap. He is too successful from Canada. We don't like that. We say you must pay taxes. Excuse me. All right. Oh boy, this one is a complicated one. We're going to go through it here, see if we can explain it. All right. So when you itemize deductions, right? What I said earlier, deductions, money off your taxes when you spend it on certain things. One of those things is state taxes. So when you pay your federal taxes, money that you spend on state income taxes can be deducted as an itemized deduction. It doesn't count. But if you get a refund of part of that money that you spent to the state, that needs to be added into your tax return next year as income. Excuse me. So it only applies if the deduction reduces your taxable income, which is very state specific. Many states, they don't have an income tax return or an income tax program. So our dear friends in Florida, hermanas latinas, they probably won't have to worry about this at all, those lucky folks. Pennsylvania also has a flat tax. So the folks there generally don't need to do this because their taxes always come out right. Minnesota, this used to be a pretty big deal, but they changed their tax rules back in 2020. And since then, there are not a lot of students that get a Minnesota tax refund. So it's not as common as it used to be, but it does still occasionally happen. So here's an example to try to make it, hopefully it will help it make sense. So on your federal tax return, let's say you had wages of 10,000, you had Minnesota tax withheld of 500. So your taxable income is 9,500. That's how much you have to do your percentage on, your 10% on to pay tax. On your Minnesota return, your wages were 10,000. The tax that was calculated was 400. So you get $100 back. You didn't count that original 500 on your tax return, but it turned out you didn't really have to pay 500, right? You only ended up having to pay 400. You got 100 back. And so that 100 now needs to be included in your income on your tax return. Does that make sense to people? This is like the worst concept, so I hate trying to explain it. All right. Next one is scholarships and fellowships. All right. So scholarships and fellowships. So income in the form of a scholarship or fellowship can be treated in one of three ways. It is either excludable under the Internal Revenue Code. If that is the case, and this is your only income in the United States, you don't have to file a tax return. And this is excludable for everybody. It doesn't matter what your tax residency is, whether you're a non-resident alien or resident alien. But if it's not excludable, it could be exempt by tax treaty or it is taxable. And this is, again, only for scholarships from the United States, right? Remember, if the money comes from outside the United States, we don't care about it. We just pretend that it doesn't exist. So to meet the requirements for a qualified scholarship, the student must be a candidate for a degree. The payment must be for tuition, books, or supplies that are required to buy. Yeah. It's not required that the scholarship provider include these amounts on a 1042-S form that's for a scholarship. So if somebody comes here and they get a scholarship, say a partial tuition scholarship to go to Carlson, which is the business school here, that is probably not going to be reported to them on a 1042-S, right? Because it's only for tuition. They're a degree candidate here at the University of Minnesota. So that is a qualified scholarship and it's not taxable and it's not reportable. If, however, they are here to play hockey and they get a full ride scholarship, so they get tuition, they get room and board, that amount that's for room and board, that is going to be taxable income. And so they would get a 1042-S that says the amount of that scholarship. All right, scholarships and fellowship grants can be excluded by treaty. This is about where we would report it, so I'm going to kind of jump over that for now. I'm going to go back to it because so the code number 16 in our little 4011 books, that is kind of our primary spot to look to see what countries have treaty benefits for tax treaties. Generally, it is unlimited amounts. The one exception to that are the Commonwealth of Independent States, where there's a $10,000 limit that can only be used for living expenses. So if somebody were, my favorite again from Bangladesh, right, there's no limit on the money. So if they get a scholarship or fellowship and they say, hey, I'm going to go on spring break this year, it's going to be fantastic. I'm going down to Florida. They'll help me down there with my taxes. Totally fine. Doesn't matter what he spent it on. It's because he's got a tax treaty. It is not going to be taxable. All right. Everybody else, it's going to be taxable. It's going to generally come on a 1042-S, and you're going to have to do that. But note, if you are required to provide services for this, if you have to do things for it, like teaching, that is not a scholarship or a fellowship anymore, right? That is wages. You are required to actually do work, then that is payment for services. All right. We're running late, so I'm going to jump over these really quickly here. We're going to talk about interest, dividends, and capital gains. All right, so dividends are amounts paid by a company to shareholders. Capital gains are when you sell an asset for more than you purchased it. So this is one where you need the advanced certification as well as the foreign student certification if you want to help with capital gains. Generally, it's going to be taxable if it's from a U.S. payer. So if it's like a U.S. company listed on the U.S. stock exchange, again, bank interest is excluded. It's going to be taxed generally at 30% unless there is a treaty that provides a lower tax rate. The treaty benefits for these are in scope for us, so we can help people with that lower tax rate. So then there are some people that do it. There's a whole bunch of fine print. I'm not going to go through it all, but it's in our 4011s as well that talks about under what circumstances does a dividend qualify for that special treaty rate. There are a lot of requirements to be a real estate investment trust or a registered investment corporation. But there are some that don't have those requirements. So the people that don't have that special print, but also get a good rate, China, Indonesia, and Romania have a 10% tax rate on dividends. This is the group. There's a 15% group, and then there's one at 25%. That's the Philippines. So, and those are all in here. Same thing on capital gains. So capital gains are interesting because there is an exception. So if you are physically present for less than 183 days, none of the capital gains are taxable. And in this case, we look at actual physical presence, not the exempt thing. So it's like if you're literally here for less than 183 days, you don't have to pay US tax on capital gains. So maybe the first year that somebody's here or the last year, but generally once they're a student and they're here in the spring and the fall, they're not going to meet that 183 days requirement. Beyond that, there can be treaty benefits for capital gains. But some of our most popular countries, China, India, and South Korea, they all have a 30% treaty benefit, which is the same thing as the regular treaty rate. So it does not do them really any good. If you do have somebody that's trying to claim a treaty benefit that's less, I would always encourage them and you to check the treaty articles just to make sure there aren't any other provisions. So for example, an Ireland provision that basically talks about capital gains, blah, 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 resident of contracting state, talks about alienation of immovable property. So that would be like land and buildings. It talks about alienation of movable property that are attributed to a permanent establishment. So that would be like you have a business in one place and you move things to another place. Talks about gains from alienation of ships, aircrafts, or containers, right? So if you are selling ships or aircraft, then you are exempt from capital gains. And then the last one, let's go back here, hide this so everybody can see it. Gains from the alienation of any property other than the property referred to in paragraphs 1 to 4 shall be taxable only in the contracting state of which the alienator is a resident. So if we were to have some lucky person from India, or pardon me, Ireland, who came in, did a bunch of stock trading, they would not owe any tax on their capital gains if they made any money on it. Okay?
What if they purchase real estate, a house, or anything like that?
So yeah, so this is the general treaty for the US and Ireland, so everybody. So, right, it could be people that move here from Ireland to follow a job. They work for a company. It could be somebody that's buying like rental property. They say, yeah, well, I want to go buy a condo in Florida. I'll rent it out on Airbnb and go visit there a couple of weeks a year. It'll be fantastic. It can be all kinds of things like that. So this is the generic, this is like the treaty that applies to everybody that was like signed off by the president and the Senate and all that kind of good stuff. All right. I'm going to skip this because we're really late. All right. And questions? I know that was a lot. It's a lot of income. All right. Any questions at all? Yes.
Sorry, this, for LinkedIn. I mean, tax about the stock, like the sales
Yeah.
of stock.
Yeah.
Is there a difference between the tax that you hold for long-term and short-term?
Not for non-residents.
Okay.
For residents, yes. If you hold it for more than a year, you get a lower tax rate. It's called a long-term capital gain. Stick around into the resident section. We'll talk about that. But for non-residents, no. And it's 30%. So it's like killer. Yeah. Okay. All right. So I'm almost 20 minutes late. I have no good judge of time. But that's our end of our non-resident. I'm going to talk about kind of plans, and then we're going to break for 5 minutes and jump into resident taxes. So before we do that, so anybody that's borrowed here in class, if you borrowed a 4011, please leave it, okay? I believe that there is at least one mistake in it, so I want to check that mistake and like write a correction in everybody's thing before you take it with you. So please leave it here. You can find the online version as well. Getting that one will be a little bit more trouble to get fixed, but please leave that here. And if you're going to leave, please just put your nameplates up here in the front so we know like who is here, so we can keep track of our attendance that way. Okay, so everybody should have been invited to the Moodle class. So if you have any problems, please let me know. Hypothetically, Lincoln Learn is going to go live tomorrow. If it does, I'm going to go on, I'll make an account. I will do the first 2 tests, the standards of conduct, intake interview, and quality review. If everything goes well, I will send out a note to everybody saying the gates are open, please go do that. So that's going to be your first homework, right? When Lincoln Learn goes live, take the standards of conduct test, take the intake interview and quality review test. The 2 practice quizzes that you guys had for those are aimed at helping you be ready for them. So make sure you do our quizzes first before you do the other ones. And remember, you only get 2 chances. So be careful, answer like in the most correct way, use your reference information to find the right answers. I'm also going to release 2 more modules to everybody. So we're going to do another Form 8843 exempt days reporting. It's going to be an assignment. So you'll get to download the PDF of the 8843, fill it out, and then upload the PDF for me. So it gives everybody lots of practice because this is really important. And then there'll be some info and a quiz on income and tax treaties for non-resident aliens. Those should get released tomorrow, pending any Lincoln Learn craziness that's going on. Okay. All right, any questions before we stop? All right, we are going to come back then at 7:25. Oops, we're running a little late. Stop.